So the first strategy that I use in terms of buying low and selling high, it's given by Ray Dalio, and I'm paraphrasing him. So essentially what he says is that, hey, if a fundamentally good company is making the highest ever profits, right? So please listen to this, that if a fundamentally good company is making the highest ever profits and the share prices are not trading at its highest ever price, then you should go and buy it. Hello everyone, welcome to today's video. So today I have something very interesting for you, and we are going to talk about the basics of stock market and how you can make money in a consistent manner in the stock market. I have been doing it for years, so I'll share some of my strategies with you. But more importantly, I am going to debunk some of the myths that are associated with the stock markets. So let me start today's video by asking you a very simple question. The question is that what according to you is the best strategy to make money in the stock market? Now, some of you would say that, hey, you know what, Warren Buffett says long-term investing. So I'm a long-term investor. Some of you would say that I do futures and options. Some of you would say that I do swing trading. Some of you would say that I do intraday trading. So type out your answers in the comments. That will help me understand what you're thinking about. But here is my take on this question. According to me, there is no one good strategy of making money in the stock market. You have to mix and match strategies. For example, I use long-term trading also. I use swing trading also. I do FNA also. I do intraday trading also. So I do a bunch of things depending on the market mood, sentiments, where the market is going, which stock am I trading in. Now you would say that, hey Akshat, you know what, this is like super confusing. There are like so many things. How would I learn so much stuff in one go? Where should I get started? So this is where you get started. So if you are a complete beginner in the stock market, the single strategy that you must know to make money in the stock market is that you must know how to buy low and sell high. So if you're buying any stock at a low price and selling it at a high price, of course you're making profit, and of course you would enjoy your stock market journey. Of course you will make money, and you would not keep yourself asking questions that, you know what, should I become a long-term investor? Should I become a short-term investor? All that stuff, right? All those are secondary things that you will learn subsequently. As you start trading in the market, you will figure out what your investment style is, what type of investment style suits you. But to get to that point, first and foremost, you must survive in the stock market for a long duration of time. And for that, you absolutely must know how to buy low, sell high. So this is what I'm going to talk about in this video. So I'm going to explain this strategy of buying low and selling high systematically today on this video. So please stay till the end. There are 3 specific points that I will discuss. First, I'm going to talk about the basics of stock market. How do stock prices move? That's one. Number 2, I'm going to show you systematic methods of buying low and selling high. Point number 3, I'm going to speak about risk diversification. This is extremely important, especially for intermediate and beginner investors. So you must understand risk diversification, and I'm going to use small case to systematically show you how you can diversify your risk. So let's get this video started. So let's start with the absolute basics, and let's try to understand that how is it that a stock price is calculated. So here I have a small sample case for you. So here is Kotak Mahindra Bank, and this is one of the biggest banks in India, and you can see that the current stock price is trading at 1766, right? So how did we get to this number, right? So there is something called as present value of future cash flows. Okay. So this is a very important concept for you to understand about finance. So let's try to understand this from an example. So let's say that you are trying to estimate the present value of future cash flows for my YouTube channel. Okay. So you're going to invest in Akshat Shrivastava's YouTube channel. So how are you going to figure out the dollar value of this, right? So what you are going to do is that you are going to run an estimate. Okay. So you are going to run an estimate. So what you are going to compute is that you are going to write that, hey, present value of future cash flows, and you are going to estimate the amount of money that I'll be making every year. So let's imagine that in year 1, I make $100 from my YouTube. In year 2, I make $200, right? In year 3, I make $300. In year 4, I make $400, etc., etc., right? So I run this model. Okay. Now, in year 1, if I ask you that, hey, Akshat Shrivastava is making $100. So what is the value of this $100 today, right? So let's imagine that I'm making this $100 today. So then what is the value of this $100 today? It is $100, right? Very easy. But this $200 I'm making next year. So what is the value of this $200 today? It will be less than $200 or more than $200? It will be less than $200. Why? Let me ask you a question. Would you prefer to take $100 from me today, or would you want to take $100 from me 5 years from now. So you might say that, hey Akshat, give me $100 today. Why should I wait for 5 years, right? I'm taking unnecessarily risk. I don't know where you will be after 5 years. So give me $100 today, right? Because you're taking risk. Therefore, you need to discount this $200 today by a certain rate. That is called as discount rate. Okay. So let's imagine it to be X. Okay. Similarly, when you try to compute the present value of this, it will be 1 plus something discount rate raised to the power 2, so on and so forth. So essentially you will build this kind of a discounted cash flow model. This is called as present value of future cash flow. You can read more about this and understand more. Now there are certain things that I want you to notice. Now this is not a finance class, but this is a common sense class, right? So what I want you to notice is that, hey, this is a variable. Now, if you go to one analyst, they will give you a certain discount rate. If you go to analyst 2, they will give you a certain discount rate. These are all estimates. So the current price that comes up here for Kotak Mahindra Bank, it's an estimate, right? It's an estimate. This is a very important point for you to understand, that people come up with different estimates for different things, right? Now these are all built on hypothetical models. These are sophisticated. They have gone better with time, but no one can guarantee that, hey, this is the value of Kotak Mahindra Bank, right? This is a very important point for you to understand, because people just imagine that, hey, because Mr. Warren Buffett has said this, or person X or Y has said this, therefore it becomes the true value of this. No, this is an estimate. Okay, it really depends on a lot of things. How the market will grow, how the competition will grow, what discount rate you are assuming, and bunch of different things that goes into this model. Okay, so I hope this point is clear, that this is how a stock price is estimated. Now this brings us to the second related concept, which is how a stock price moves. Okay, in the first section we understood that how a stock price is estimated. We have estimated it, but how is it moving, right? For example, if you take let's say the entire summary of Kotak Mahindra Bank. Now that present value of future cash flow here sometime in January 2022 was 1600 rupees for Kotak Mahindra Bank. Now it's approximately 1800 rupees, right? In June of 2021. It was somewhere around 2000 rupees, right? At one point in time. The point is, there is so much variability, right? Because the estimates of present value of future cash flows actually change from literally every single day, every single hour, right? That is the reason why stocks move like this, right? All the graphs that you're seeing, right? It's moving like this. It's not going like this in a straight line fashion, and it's not coming down like this. It's not going up like this, and it's not going like this. It is actually moving like this, right? And this is how stock prices for every single stock moves. This is a very important point for you to understand if you want to understand the technique of buying low and selling high. Now, why am I telling you this? Now, I'm telling you this for two reasons. One is that to help you understand the psychology of retail investors, right? Retail investors, right? So, if I ask you a simple question, that why do you think almost 95% retail investors lose money in the stock market? What would that reason be? The reason is here, what I just explained. The reason is that they will sell here and they will buy here. Okay, it should be the opposite. What they do is that they will sell here and they will buy here, right? This is generally how retail investors operate, that they are thrown some bit of news in front of them. They will assume that, you know what, every bad thing is going to happen with this bank here, let me sell it and get out. And they get out of it. Then some good news runs, right? Starts running here. Then they imagine that, you know what, okay, it's going to go up. Let me buy it now. Otherwise, I'll miss the bus. So they buy it here, right? You should be doing the opposite. And trust me, 95% of retail investors lose money because of this mistake. They are buying high and they are selling low. It should be the opposite. Which brings me to the second related concept, which is long-term investing. Now, you might have heard of people like Ray Dalio, Warren Buffett saying things like that, hey, buy a good company stock which has very strong fundamentals, hold it for your lifetime, and you will make insane amount of money. But that approach works, but that does not necessarily work for retail investors. Okay, you need to be smart in terms of using that strategy. Mr. Warren Buffett and Ray Dalio are right. They are not giving you incorrect information, but the level of research that Mr. Warren Buffett does or Ray Dalio does, that type of team that they have, the amount of investments that they make, the access to resources that they have, that is massive. For example, I love to give this example that if Mr. Warren Buffett wants to invest in Coca-Cola stock, he can actually call up the CEO, he can ask for a bunch of information, but can you and I do that thing? No, right? So what happens is that we end up panic selling, right? This is what we end up doing, right? And we end up doing panic buying. This is what we end up doing. Mr. Warren Buffett would never do this, right? He would still buy low and sell high. Now let me prove this, that long-term strategy does not always work by giving you a few examples. So let's take a look at Reliance Communication stock. Now this is a Reliance stock backed by such a big family, such a big business family, and look at what happened to the stock price, right? In 2007, it was trading at 786. Now it is trading at 4.25, right? So it has literally become zero. The point I'm trying to tell you is that it's not as if that when people were buying Reliance Communication at 734, it was fundamentally a bad stock. No, right? It just was driven to the ground due to bad management, things like that, and it became bad, right? The point that I want to drive home is very simple, that certain stocks or certain companies can look like brilliant business models at a certain point in time. You might think that, hey, I'm investing all my savings in a wonderful stock, let me invest it, because this business is going to blow up. But business is very dynamic. It can change. Even the biggest companies can fall. For example, Kodak. It was one of the biggest photography companies in the world before the invention of digital photography and the Instagram world, which blew up. Look at the share prices of Kodak. It was a brilliant business model. If you would have invested in that company $32.86 in 2013, it would have become $7 today. Okay. So the point that I'm trying to tell you is that Kodak was not a fundamentally bad business. It was a fundamentally good business. There was nothing wrong with Kodak. It was a wonderful company. It was doing wonderfully well. It has an amazing market share. Everything was on point. Then what happened? Disruption happened. New type of technology came in and it disrupted Kodak. Now you as a retail investor, could you have predicted that? Very unlikely. So the point that I'm trying to tell you is this. Number one, doing fundamental analysis is wonderful. Investing for long term is wonderful. But is that a sure shot winning strategy? The answer is no. You must be smart. You must book profits when you're getting profits up to a certain stage. And you must follow the concept of buying low and selling high. That is extremely, extremely important. Which brings us to part 2 of the video. That how do you buy low and sell high? I'm going to share 3 specific strategies with you that I personally use and hopefully you will benefit from it. So the first strategy that I use in terms of buying low and selling high, it's given by Ray Dalio and I'm paraphrasing him. So essentially what he says is that, hey, if a company, a fundamentally good company is making the highest ever profits, right? So please listen to this, that if a fundamentally good company is making the highest ever profits and the share prices are not trading at its highest ever price, then you should go and buy it. Okay, so let me break this statement down for you. So essentially we are looking for a company, right, that is trading at its highest ever profit. Okay, its profit should be the highest and at the same time the company should not be trading at its highest price. Okay, the stock price should not be the highest. So what kind of companies these could be in today's market? So let me show you an example. Now let's look at HDFC Bank. Let's go and try to apply this logic. So let's look at profit and loss. Okay. So we are looking at a window of March 2010 to March 2021. Now can you check whether this company is making its highest ever profit? The answer is yes, right? It's making a profit of 42,786. That is profit before tax. Even if you take it profit after tax, it is still making insane amount of profit. And these look to be its highest ever profits. Simple, nothing going wrong there. Okay. Now that's one. Now let's check the second condition. So what are we going to check here? We are going to check the stock prices. Okay. So we are going to take a look. Now very recently, the highest ever price for HDFC Bank was 1626. Okay. You can see it from here that it was trading at 1626 and right now it's trading at 1480. Right. So there is a profit to be made of around 140, 150 rupees per share. Now, please note, this is not an investment advice. I am just sharing principles, what I have learned, how I buy stocks. So, therefore, I am a net buyer in HDFC Bank. You can check the same condition for stocks like Kotak Bank, which I showed you. Again, it will meet the same criteria. So, the idea is that as a retail investor, even if you do this basic analysis, you will still make money. But what retail investors do, they will see that, you know what, HDFC Bank is going at like 1620. Let me buy it now. So, if you're buying the stock here, it's a bad move, right? You must understand that, hey, this is a good buying region. Now, I am not telling you that, you know what, I'm maximizing your profit. Or I'm telling you is that, hey, this way, through this Peter Lynch strategy, there is a very low probability that you will lose money. So, this is one key thing. Now, you would say that, hey, Akshat, why did you pick HDFC Bank and why do you think that it's a fundamentally good stock? I'm a novice investor. Please tell me what fundamental analysis is. Now, of course, guys, there is like a bunch of techniques that you can do for fundamental analysis, but ask yourself a commonsensical question. And please answer this in the comments that which, according to you, is the best bank in India? Now, please don't say SBI, right? Best bank in India in terms of customer services, bunch of other things like how it has grown, its track record, history, customer satisfaction, bunch of different things, right? Now, all banks are bad and people would put in a lot of complaints, but the bottom line here is that HDFC Bank, all of us can agree that hey, it's a solid bank. It's one of the biggest banks in India. It has grown massively. It outlines India's banking growth story. So, if you do even basic article reading, you would easily make money from this strategy. Now, this is the first key method and the easiest method that I can tell you to identify good stocks at good prices, buying low and selling high. Okay, before I move on, last point here that you might say that Akshat, that hey, okay, great, I can go and buy it. When should I sell it? You should sell it when it becomes the highest, right? That's it. You would still make 150, 200 rupees. Now you might say that, hey Akshat, I don't want to sell it. I'm buying it at like whatever 1500 levels. What if it goes to 2000? You asked me to sell it at like 1700, right? I'm losing money. No, you're not losing money. You're actually still making good amount of money. You're not maximizing profit. So leave it. It's not a big deal, right? You're still making money with this strategy. You're definitely not losing money with this strategy. So don't be greedy. For example, in my case, I always aim for like 20% return, 15 to 20% return in a 1 year from stock market. And I'm consistently making it by playing safe because I'm a conservative investor. So now let's move on to the second strategy, which is called as moving average strategy. Now in moving average strategy, it's very simple. And let me illustrate by giving you a very specific example of how you buy low and sell high. Now here what you need to do is that you need to go to this FX, right? You need to go to this FX and put this study, which is called as simple moving averages, right? So put the simple moving average study here. You simply need to change the settings here and you need to change it to 200-day, 50-day and 20-day moving average. 200, 50 and 20, right? Now what is the buying level? The buying level is a time when 200-day is at top, followed by 50-day, followed by 20-day and price should be below that. So you can see this happening that this black line is 200-day moving average line. So let me just mark it. This black line is 200-day. This green line is 20-day. This red line is 50-day. Okay. Very, very clear. Now, the situation should come when 200-day is at the top, followed by 50-day, followed by 20-day, followed by price, right? So this is the situation. Where does this happen? This is 200-day. This is 50-day, this is 20-day, this is price, right? So I started aggregating this stock at around 450-ish levels, okay? And when do you need to sell it? So this is the buying zone for this stock, right? And when is the selling zone? The selling zone is when opposite happens, that price followed by 20-day, followed by 50-day, followed by 200-day, right? So when does this happen? This is the selling zone. Now this black line should be at the bottom because this is 200-day, right? And this 20-day, which is the green line, should be at the top. So this happens here, right? And price is closing above. So you are selling at somewhere around 640 levels. Now I'll put the screenshot. I actually did this, right? So you can check my Kaplan point and I made approximately, so let me just quickly open it. So I bought this stock at 492 levels and I sold it at 630 levels. And in the process, I made close to 1 lakh within a few days time of trading this stock. So this was done using a simple moving average strategy. Does this work every single time? The answer is no. Because you need to consider multiple indicators. Please drop a comment if you would want me to teach all these multiple indicators, but this is a good starting point. You can keep identifying stocks by using Ray Dalio strategy, MACD strategies, and combination. Whenever it happens, that's a very powerful indication sign. Okay, so keep that in mind. Now let's move on to the third strategy that I'm going to show you in terms of buying low and selling high. Now I had made a post on LinkedIn. If I can find it, I'll link it somewhere here, that I traded Bajaj Finance stock 5 times in less than a year. And I made a lot of money on it, right? So let me show you one of those trades. Okay, so this third strategy is called as range buying strategy. Okay, range buying strategy, range buying and selling strategy. So this third strategy is called as range buying and selling strategy. Now here what happens is that you must see a continuous increase in price. Okay, so here you can see that the stock price has actually gone up from 4,600 approximately to 5,600, right? Now here you don't need to do anything. Let the stock price rise. Now a lot of people make the mistake that they start buying stuff here, right? And that is the reason why they lose money, that they will keep on buying the stuff here when the stock price is actually shooting up, and that might prove to be a really bad strategy. Okay, so you simply observe, right? You just sit, you observe that hey, 4,600 levels, 5,600 levels. Now put a band. Okay, so here you have drawn your band. Now it's very easy. Now this gives you the range in which the stock price is moving. So here you can identify that the stock moved by what, like 40%, like approximately. So it moved a lot in this range and this becomes your trading range. Now essentially whenever the stock hits the bottom, you just buy it. whenever it hits the top, you just sell it. Okay. Now this happened where? It happened here, right? At 4600 levels, and I sold the stock at 5600 levels. So I'll show you the trade also. And I kept doing this, right? I identified such bands on Bajaj Finance stock and I kept trading it 4 or 5 times. So this is your third strategy, which is called as range buying or selling strategy. This again tells you how to buy low and sell high. So let me show you the chart for Bajaj Finance as well, where I had made this trade and where I had actually made some money. So you can see that I bought 231 stocks at 4800 levels and I sold it at 5600 levels precisely, right? So this was the strategy that I was using. So very quickly, 3 strategies I'll summarize. Number 1, Ray Dalio strategy, fundamental analysis. Number 2, simple moving average strategy. Number 3, range buying and selling strategy. If you use a combination of all these 3 things, which I have explained in a very simple manner, please give it a like and a thumbs up if you like these strategies. I have fundamentally showed you how I myself have made money by using these strategies, and you too can, right? So please use the amalgamation of all these 3 strategies and see which stocks you can buy versus sell and at what points. This will give you a lot of profits in the stock market. Now comes the final point that I wanted to discuss on today's video, which is about risk diversification. Why is it important and why you need to do it? Now let me explain this by quoting the example of ITC Limited. Now please open YouTube or go on Google and type ITC expected value. You will have so many commentators giving positive news about ITC. ITC is such a fundamentally good stock. You should go and buy ITC, etc., etc. I too agree that ITC is a very good stock. There are some fundamental issues here and there, but like every other company, it has a very strong backing to overcome those issues, and it is an undervalued stock. But here is the problem. Now, despite us believing that ITC is fundamentally a very good stock, almost everyone believes that ITC is a fundamentally very good stock. But the problem with ITC is that, hey, it's just not giving returns. What can you do about it? Now, experts can believe in any stock that they want, right? But the market tells you what the worth of a company is. Now, if it's not moving, it's not moving. There is nothing much you can do about it. So let us just very quickly take a look at the ITC stock. So let me take a window of 1 year and you can see that, hey, ITC was trading at 209 last June and it's trading at 202 this June. So unfortunately, it has given negative returns. I too am invested in ITC, a little bit of money. But the point is that this is the reason why, that despite a stock being fundamentally good, everything being on point, it is still not moving. Therefore, you must diversify your risk. It is absolutely essential. For example, I might believe in one stock to be that golden stock, but I will never go and invest more than 10% of my capital ever. Now, let me take you to small case and let me discuss 2 strategies that you can use for investing in small cases and diversifying your risk. So the first strategy is for investors who are completely novice, who are just new to the stock market and they don't want to lose money. So there are a lot of financial analysts who do the similar kind of computations that I did and showed you how I make money in the stock markets. And they also do similar analysis for small cases and they manage the entire portfolio. So you can go and check these different small cases out. For example, you can go and check this brand value small case that I talked about on one of my previous videos. I will link it here. So you can go and purchase this brand value based small case. Now, if you take a look at that how your risk gets diversified, it's very simple. Look at the weights that have been assigned. Hardly any stock would have more than 10% weight, right? So this gives you excellent diversification in terms of investing in good stocks. That's one. Second is that you might say that, hey Akshat, you know what, glad you showed me this. I'm going to go on my trading account and I'm going to literally replicate this model. It is good and you can do that, but the issue here would be that you might not be able to rebalance, right? In small case, the advantage is that this portfolio of these different stocks, it gets rebalanced because market dynamics change. For example, I gave you the example of Bajaj Finance. I traded it 5 times this year and made a lot of money on it. But am I doing it now? No, I'm not doing it, right? So it's out of my portfolio of stocks as of now. I might come back into it later depending on the market dynamics, but for the time being, I'm out. Similarly, financial analysts who work with small case, they rebalance this particular portfolio of stocks, right? So they will rebalance this portfolio called brand value. You will get the notification of rebalancing and then you can rebalance your portfolio very quickly. That is the primary advantage of investing in good small cases, that rebalancing happens. So this is one. Your second option would be that you can go and create your own small case. For example, I told you about Ray Dalio strategy, right? That I'm investing in certain companies. For example, I'm investing in HDFC Bank. I'm investing in Kotak Bank. I'm investing in Tata Steel. So this way you can keep adding stocks. You will also get the investment amount also, and I can rename this small case, right? I can probably call it Ray Dalio strategy. Right. So I will do it, right? And this is Ray Dalio's stocks. Ray Dalio's strategy stocks, right? So these are all the stocks in my opinion that would meet this criteria, and this way you can build your own small case and you can assign it to a particular strategy. For example, I'm assigning this strategy to Ray Dalio's strategy that I'm using. Similarly, I can create another small case of simple moving averages. The primary advantage of small cases is the risk diversification that I'm speaking about, and you can assign it to a particular strategy. So I hope you enjoyed this video. So please press the like button. That will help a lot with the YouTube algorithm, and it would indicate to me that you appreciate this type of content and I would continue to make such videos. Thank you so much for joining in today, and I will see you on the next video.